have an awesome panel today about climate tech. We're going to be talking about climate tech in general across the world, and then also some opportunities in CEE. Guiding all of you through this journey of the conversation will be yours truly, Eleanor Warnock. I'm deputy editor at Sifted. We're an FT-backed publication that covers startups and scale-ups in Europe. And actually one of the big verticals for us in our coverage and something that our readers love is actually climate tech and sustainability. So I am very excited for this conversation. I think that we're going to start off with a little presentation from Jose.
Hello,
Yeah,
everyone.
Jose.
Hi. Can you hear me?
Yeah, loud and clear.
Oh, great. Good morning, and happy to be here. Thank you so much for the invitation to the organizers, and it's a pleasure to be joining virtually. I wish I could be there in Warsaw, but I must say that this week, I've been in Lisbon having a very interesting conversation with colleagues at the European and Middle East level in terms of climate change. So, very relevant topic for today's discussion. And before we start, just a quick introduction of myself. I'm Jose. I'm based in Warsaw, manager of the CESG hub for Poland and a network of 29 countries. And I'm responsible for driving strategy and transformation related services with a particular focus on net zero. So for today's presentation, it's going to be fairly short. It's going to be meant to be like some background for the conversation that we will have, and I will just share with everyone some of the key findings of our PwC global research in terms of climate tech investments around the world, as well as doing a small zoom in terms of some of the key trends that we see in terms of concentration of those investments by sector and also by territory, as well as to finish up with some potential untapped opportunities that we see across PwC. So climate change is increasingly getting into the minds and, of course, the conversations and the actions of investors. There's a number of megatrends that they've been converging, and we see these as a stark reminder by the IPCC, which is like the UN body responsible for presenting climate related research and also advancing science in this front. Just got published a new report that we're seeing that the window for achieving like the 1.5-degree goal in terms of like what the scientists recommend, that it's where we should not exceed, not to enter into any sort of existential and irreversible risk. We're reaching to that tipping point. So there's a number of risks, physical risks that we're already experiencing today. They are increasingly going to be experienced in the future as well. And then, of course, there's also the topic that we need to decarbonize our economies, and that also exposes us to certain transition risks. We see a lot of rise in terms of net zero pledges, private sector, public sector, investors alike. Currently, more than 90% of the global economy has some form, is covered by some form of net zero pledge. Many of those are still yet to be science-based or to have like a definite action or concrete like roadmap and action plan. However, we do see that there's the interest and, of course, increasingly commitment in terms of this area. Last year in COP26, more than 130 trillion of capital was like committed from the investment side. And then, of course, here in the region, in the European Union, and also like wider CEE, we're seeing that in terms of the Green Deal, the impact of the regulation, which is very ambitious, aiming to decarbonize the European Union and make it the first carbon neutral continent by 2050, essentially will imply reviewing all the laws, all the legislation, and make a systemic transformation across all the sectors, which, of course, all of these, let's say, are certain pressure points. But then on the opposite side, we also have like the opportunities. At PwC, we're seeing like unprecedented level of growth in terms of climate tech. Just in the last 8 years, we have seen more than 220 billion USD that has been mobilized to be invested in climate tech startups, and especially like in the most recent time, in the first half of 2021, we just saw 60 billion being mobilized in that particular segment. So at PwC, every year for the last 2 years, we've been conducting research, identifying all the climate tech startups around the world. Latest one, we have identified more than 3,000. And overall, the things and trends that we see is that funding levels are showing accelerated growth. That comes in the number of deals as well as the average size of those deals. And if you can see here in the chart, you will see how the graphs, the concentration seems to be increasingly growing year by year, especially like every half of a year. There's also some distribution by sector. I'll show you in the next slide. And then in terms of what I was mentioning about the average deal size, how much is growing, it's a very significant growth. Just in the last year alone, has like more than quadruple. And currently, for every dollar of BC invested, 14 cents are basically invested in a climate tech startup. So there's a lot of attention into this space, as well as investors are increasingly looking to diversify into these kinds of portfolios. And now, this is some of the most, I'll say, relevant or interesting things that we can have to kickstart the conversation, which is like where's the concentration of these climate tech investments. And we see that most of the investments are actually in terms of the future of mobility and transportation, as well as the energy. And there's much less concentration if, let's say, traditional sectors like industry, manufacturing, and also the built environment and cities. Um, there's also some overlapping solutions, software as a service, also carbon offsets that they might apply to different services. That segment is also receiving increasing attention, also increasing investment. And in terms of where these investments are located, they are clearly majority US based. Nearly 65% of the capital invested has been invested in the climate tech startups in the US by US venture capital. However, we do see a very significant growth as well in Europe, China. And if we look at, let's say, the 10 largest investment hubs, it goes 50-50 in terms of the US and also US and North America, and also Europe. This also reflects like the level of maturity in terms of the startup ecosystems as a whole, and that's also one of the major reasons that influences. And then this is also something that we are seeing in terms of PwC of what can be like a potential opportunity of untapped capacity for achieving significant returns, as well as significant positive climate impact, as well as decarbonization, which is currently the amount of capital is concentrated in few sectors. However, if we will look at it like on the left side and you see the share of global emissions uh, breaking down by sector, actually we are seeing that there's a misgap. About 25% of capital invested stays with what could be 80% of the solutions in terms of like addressing climate change, which on one side represents a missed opportunity, but on the other hand, it also represents like a potential opportunity for the future, for areas of growth. And then the other topic, of course, is for all these different climate tech startups and the solutions that they offer, their technologies, they have different levels of maturity. Some of them, we see them like significantly more mature, like let's say micromobility solutions, solar powered, which is reaching like a very high stage of development. However, in terms of other things like low greenhouse gas emissions shipping, uh, we're still not there yet. We still haven't passed the breakthrough innovation point, and this could be something that there could be untapped opportunities in the future. And just before I close this presentation, just wanted to leave here a small reflection of the thoughts of an infrastructure investor from interviews that we have had. And the truth is that, of course, this is something challenging for investors. Investors alone cannot do it as well. There's also certain role that collaborations and government as well needs to play in the middle of all this as well to help to alleviate or share the risk taking and help those technologies to pass the breakthrough innovation point to further like scale ups in terms of maturity. And that will be it for my presentation. And just to say something, we'll be really curious to know your thoughts about what do you see in terms of this space for the CE region. Thank you.
Thank you, Jose. You set us up super well with a good overview of what's happening at the global level. And now I'd like to jump into the conversation and take us down, as you just said, into the CEE region and talk about what's going on there. Maybe you want to kick us off, Carolina, about what are you seeing here? How does that compare with what's happening at a global level?
Sure. Thank you very much for letting me start this, Eleanor, because we as ICOS are a fund that is investing both in Western Europe and Central and Eastern Europe. So we clearly see the differences, but they are not really coming down to the trends. So in terms of the global trends, you see pretty much the same trends in our region. So basically, there is also more and more startups emerging in the climate tech space, especially when you look, for example, into mobility, industrial solutions, AI data-driven solutions, or food tech recently especially. So those solutions are emerging. However, when compared to Western Europe, there are much more earlier. So you just see the founders starting the ideas, or you see the scientists going out of universities, building the projects, while in the Western Europe, those kind of companies are already attracting Series A, Series B funding. So we are definitely earlier in the process when it comes to the development of the market. But of course, this is not a thing only typical for climate tech, but probably for most of the markets. So I would say this is the biggest difference, but in terms of trends, it's pretty much alike.
And just to follow up on that, what do you think needs to happen in the region for there to be more capital accessible to these founders and more resources for them?
Yeah, I think definitely more market maturation and especially better networking, because something that is especially painful, I must say, even for me, is that very often, for example, I'm getting asks from foreign accelerators or competitions that are targeting climate tech startups, and they have this struggle. Even like the one of the organizations where I'm a curator, they have this competition for deep tech startups, even very early companies, and they have many applications from Western Europe, many of them from US, some from Asia, and from CEE region, almost nobody. And they are asking why is that? So one of the things is that we are still not really well networked. So I feel our funds needs to work on that and really make sure that they are building the connections and then through that have better access to funding and other opportunities.
I think that tees up, Mikhail, you very well, talking about the role that corporates can play in also helping these startups bringing technology to the market. Can you talk a little bit about how BNP Paribas is doing that?
Sure, thank you for this question. So, building on what was said, I think what we are lacking is commercialization. So clean tech, climate tech is nothing without the industry in which it's working. So you cannot do mobility without moving actual people or goods across the world or Europe. And in order to do so, you cannot do a startup that will provide mobility. You must provide technology for other companies that will actually move the goods if we are focusing on mobility. So you need a partnership with big corporates which are acting on many markets. And one way to do this is corporate incubator, accelerator, partnerships with VCs or international programs. And other thing is own scouting. So if those clean techs and climate techs would be considered eligible for green funding, like loans we are granting to our corporate clients, it could be a great boost for them to be implemented, commercialized, take other from universities to the market, because it would show the right way that there is an impact, but also the money, not only the idea.
Can you talk a little bit about how you've worked to facilitate those relationships between startups and corporates, and maybe are there interesting examples of technologies that corporates have adopted?
We are still looking, frankly speaking. In France, our colleagues, I believe, invested quite recently in one of such startups that is assessing the carbon footprint based on the satellite imaging. There are some programs, but I think we are still before big announcements. So we are still looking for some companies that could implement solutions to corporate, so we could finance this implementation on a large scale and also make an example out of it. We have programs. So now we are financing, for example, energy transition, energy efficiency. We have ESG-linked loans. And these programs, this financing is open also for startups and scale-ups which would like to implement. But as Carolina said, we are still missing those companies, especially in Central and Eastern Europe.
Yannick, maybe you could talk a little bit about how you see this as an investor from outside the region. How do you think investors can identify promising startups in the sustainability or climate tech space? And maybe what are some mistakes that you've seen investors make?
Well, I think first upon touching on your point about the network, I think it's super important that the network is there, that investors from other parts of Europe connect to investors from Eastern Europe. Conferences like this are super helpful, so I'm really happy to be here and learn about the Eastern European ecosystem and learn about what startups are there, what investors are there, and expand this network. So I think this is one really, really important factor. I don't think I want to speak about mistakes that others make. Yeah, everybody's still learning and improving their own strategy. One thing I'm seeing myself is, which is also applicable to us, we are very much focused on software solutions, which are usually enablers to save the climate, but probably you cannot save the climate just by investing in software. There also needs to be a hardware component. Hardware components, for example, packaging is one really important field where there's super interesting startups coming up with algae packaging to get rid of plastics. On the software side, I see more enablers, as I said, for example, enabling people to drive electric vehicles by having a map of charging solutions, etc., creating marketplaces. I can give more examples of this. But this is something that I see that, probably you cannot just save climate just by investing in software.
And how do you, as an investor, evaluate the sustainability or the impact of the startups that you're investing in?
Yeah, that's a very, very good question. And I'm talking to other investors how you can do this, and I see it's super difficult, especially at early stage. So you see some approaches for later stage corporate companies where the corporates have information about their supply chains, about the products. They know more or less how much greenhouse gases or CO2 equivalents are being created, and then they somehow can measure it. But especially in early stage, you have a very big problem estimating it. And from my point of view, it is just one thing to look at when you evaluate a startup in early stage. There are more important factors, such as, are the founders able to deliver the vision that they're believing in? And I think if they're too much focused on measuring the impact at the very beginning, they're not going to get running. I think it's more important to get into the system and do something. I think also a lot of corporates even have problems measuring their CO2 emissions or greenhouse gas emissions. So for the early stage, it's super difficult. And I'm super interested if anybody knows a tool or whatever to measure this better. Please come and talk to me. I did a little bit of research on this. I found there's one tool called Crane. Maybe somebody has heard of it. There, I think one problem is when you have to do the inputs, you have to know what are the greenhouse gas emissions. You don't know it as early stage. There's one approach by Planet A Ventures from Berlin. They came up with a really interesting solution to measure the net impact. So in theory, it makes sense where you say, okay, what are the emissions pre the technology? What kind of emissions am I creating by avoiding this per unit? Then I have to multiply it by the units that I'm selling, or then I have to know how many units am I selling. So there are so many variables, and I think we're still quite far away from the point where I have one framework where I can easily measure it. But super happy to also hear other thoughts about this and learn more.
Yeah, definitely. I mean, I also want to know. Sifted should be writing about those technologies as well. Jose, I want to come over to you and ask you, what do you think that the experience in other regions can provide as kind of teaching for CEE in nurturing a climate tech ecosystem?
Sure. Thanks, Eleanor. I actually echo a lot what Yannick was mentioning in terms of the that everybody's still learning. So there's lots of things that could be lessons learned, and of course things that maybe have been I will not say mistakes, to be honest, because things that tend to happen like that because of, let's say, for example, investing in startups that they have like higher level of maturity in terms of technology, and of course that we need to assess the risk portfolio that they have. But one thing that I will say is that in the past, let's say, just looking at our analysis, the last 10 years, it's a very different period than let's say, the next 10 years. So, for example, for many investors in the last 10 years, it has not been common or mainstream to take climate or carbon consideration in terms of like the investment process. But in the future, that's going to be increasingly more common. And nowadays, for many investors, it already is. So, of course, the way that how certain investments are going to be taught or evaluated is going to be influenced about that. And I'm also going to mention a little bit about that. Yes, like the measuring part and the managing, it will not reach to the decarbonization per se, but it can help us to understand it and track it. And then, of course, that for addressing climate, there's no like silver bullet. Like we literally need to move in every single front, and that's what's going to help us to achieve the decarbonization. So, if anything, it will be to encourage investors and also startups in the region to think beyond those, let's say, more traditional sectors and solutions where the capital has been deployed, and also look at those that they also have higher potential for decarbonization, because there's also going to be some other forms of support, like eventually, like we're seeing everything that's changing due to the Green Deal, state aid programs, certain benefits. Eventually, we're going to get there. We even see it now with the impact of the war in Ukraine. That's also going to accelerate the transition to renewables in the European Union, and as well, like the increasing pressure in terms of like addressing the different kinds of climate-related risks.
Super interesting. Yannick, I wanted to come back to a point that you also raised about how obviously the technology that's going to help us deal with the climate crisis isn't just going to be software, it's going to be hardware as well. And that comes with a whole new set of challenges in terms of financing, right? And you also have these climate tech startups that are building technology that might not even be like fully commercializable for decades or a long time. So I'd love to hear from maybe you both, Carolina as well, how you see the kind of financing that's going to be necessary to bring these new ideas and technologies to market.
Maybe one point that I thought was really interesting, looking at the PwC report, was that the investment size per investment almost quadrupled. And I was wondering, is that because more investments are being done into more capital-intensive business models? So are we already moving there? And this would already be a great indicator of an improvement of the situation. Maybe Jose has more info on that. That would be interesting to see. But right now, one other interesting factor was also that most of the capital is not going into the startups that have the highest impact on climate. My hypothesis is most of the capital is still going into those startups that have more financial impact because it's easier to measure, as I just said. And I think those are the 2 points we have to look at here.
Now, what about you?
Yeah, I would agree that we are slowly going there because usually, of course, majority of the funds, they love software B2B SaaS solutions, but I fully agree those are not the solutions that will save the world and will reduce the CO2 emission, at least not on a physical level. They can always count how much is emitted to some blockchain for this, etc. But at the same time, we used to see a lot of funding going into those kind of startups, but recently we observed some really big rounds going into more climate tech-oriented startups. Even from our portfolio, recently our UK-based startup, Carbon Clean, they closed 100 million round. I think like 3 days ago, another company, Climeworks, they closed 650 million round. So we see those rounds coming, and I assume each of this startup is capturing CO2. Carbon Clean is doing it from the point of emission, while Climeworks is doing it directly from the air. So those kind of technologies are attracting the investors more and more because there you have the financial benefit from the investment, very often going hand in hand with the climate impact that those startups can make. So I believe it will attract more and more investors, especially that you see many LPs also pushing for their funds to be more sustainable and invest in such ideas.
Jose, maybe you could speak to that point about the actual round size increasing. Did you have any like data about that or view on why that's happening?
Yes, sure. Thank you. And thanks, Janek. I really appreciate the question. So the thing that we're seeing is that, let's say, where those rounds, in terms of which round they come, increasingly they come like more Series B, Series C, pre-IPO, and to a big extent also through the special purpose acquisitions, SPACs. So this has also become like more, let's say, a series of rounds and also types of ways of how the more funding is coming as well. So there's comparatively less. There's still some, but like compared to pre-seed stage or like the early stage funding, we see it more like at, let's say, at more mature levels, and then capital coming is considerably much more.
We are closing in on kind of the end of the conversation. So I just wanted to end with a question kind of for all of you, which is just super open and very simple. What are you like excited about in the climate tech space over the next 12 to 24 months? Can be a sector, can be a trend. What are you like, I'm excited to see this develop. Maybe we'll start with you, Yannick.
Thank you. Maybe two things that I already touched on previously. So I think when we're talking about hardware, this whole topic of packaging is super interesting. There's one startup from Hamburg, for example, called 1.5. They do they enable research teams to work together with corporates, because we also talked about this. And they ask, okay, what are your challenges in terms of packaging? How can we help you? And they build plastic alternatives based on algae. They even have those algae farms where the researchers are able to research and look into different solutions. And I think this is a great approach to empower, enable researchers beyond university to look for solutions for corporates. So I'm really excited about this one on the hardware side. On the software side, I'm right now looking at one exciting solution in e-mobility, in the area of how can I educate people what is the right electric vehicle for them, and especially the right charging solution, because this is still very confusing for a lot of people. It's probably also giving, or they have anxiety to buy an electric vehicle because they don't know what is the right range for me, what is the right car for me, what is the right wall box that I need to install. So there's a lot of questions around this. And I think solutions like this can also accelerate the change from combustion engines to electric vehicles.
That's a really futuristic, I love it. Carolina?
Yeah, so personally, I'm really excited about two topics right now. The one is connected to the future of manufacturing, which I truly believe lays in the biotech space. So I really look into ideas of precision fermentation, synthetic biology, cellular meat. So everything from IT solutions, modeling that to bioreactors and new technologies here. And the second topic would be around the partially CO2 emission counting, but rather the supply chain traceability and visibility, and to count how much CO2 is really emitted from the very beginning of the product creation up to the point when it is recycled. So those two topics are pretty hot for me.
And Michael, what are you excited about in this space?
I would say two things. One is very simple. So the energy transition. We cannot continue from obvious reasons to use gas or oil. We have a problem on the pan-European scale, how to supply enough energy for all these inventions you are also excited with. So I would say this is the beginning, how to supply the energy, renewable, clean energy to make all this stuff work. So this is, I would say, a grim problem for the nearest future. And on the bright side, I would say I'm very excited about the development of 3D printing in a wide range, biotechnology, but also production, what kind of impact it will have on production, manufacturing. It will be centralized, decentralized. What about supply chain in 3D printing? So this is a very near future, I believe, and it is very interesting for a more philosophical discussion.
Definitely, for next time. Jose, maybe you can also say a little bit about what you're looking about, maybe in CEE, what trends you're interested in and excited about.
Sure, thank you. Well, right now, one thing that we're seeing a lot is, let's say, the impact of the EU Green Deal, different levels, private sector, public sector as well, and of course, all to all the different stakeholder groups. So I think something that's really interesting is that now this kind of actions is becoming increasingly mainstream in terms of like it's going to be addressed, what, why, and we're moving from the what, why to the how, which is of course the difficult part. But I'm excited that, let's say, the next 12 to 24 months, we will see, let's say, more collaboration, especially cross sector, as well as, let's say, cross stakeholder group, because ultimately that's what's going to drive the innovation that is really required to both bring the innovation, the technology, and ultimately the innovation that is really required, right? And then, Eleanor, if you allow me, actually, I would like to briefly share something in terms of like what we see from PwC relevant to this conversation. Just one quick slide, which is about what you were mentioning in terms of the CEE, that we can see a lot of, let's say, more mature markets, or let's say more developed climate tech ecosystems. But we also need to uh, see that in their case, let's say the very beginning has been like a lot of concentration in pre-seed uh, stages of venture capital. Now a lot more, like to echo like the question that Janik asked, has been more in like Series B, C, and close pre-IPO, but it has stagnated the pre-seed. So we need to or move in all fronts so that we can see the progress that is required, and of course to capture all the opportunities, financial opportunities. And something also that here at PwC we're very excited for the next couple of months. I'm very pleased and delighted to announce that we are going to have a close collaboration with Wolves Summit to identify the top 50 climate tech startups here in the CE region, for CEE, by CEE, and for all of the stakeholders here. So please stay tuned for more updates from us. And also, if you know any climate tech startup, like please share this announcement. We're also going to have like a regional chapter in terms of like what we do at the global level to see what's the situation here in detail, and then we can understand more about like how to grow this emerging ecosystem.
Thank you so. Thanks so much. The mic- for joining us.